Investing in the Indian markets, even though it has been a crazy bull run, is not cool enough for a lot of people, especially in the younger generation. I'm seeing them want to invest in stocks like Amazon, Tesla, even Nvidia, and try to make much more returns than what they'll get in India. And what do they end up doing? They end up investing in these apps. I'll blur out the logos, but you'll surely know them, where they end up paying high charges and even sign up for the shady terms and conditions. And because every single financial influencer in India has pushed these companies, they end up thinking that this is the most easiest and the most cheapest way to invest into US stocks. But that is not the case. In this video, we'll discuss for a low cost and starting with a very low amount, how can you start your investment journey into US stocks, specifically US tech stocks that a lot of people are interested about. This is Ajay Ajith. Welcome to Market Feed. So the first thing we'll discuss is why invest in the US markets at all. The first point here is diversification. So I know you've heard the term a lot, diversification. But what does it really mean? It means that there is a negative correlation between two assets that you're purchasing. So for example, you might be hearing this. Whenever the stock market crashes, the gold market tends to rise up. So what is happening there? There is a negative correlation. The asset prices of one commodity is negatively inversely impacting the other commodity. So just like that, the US markets and the Indian markets have very low correlation. Earlier, over the last 20-25 years, it used to have a high correlation. That means whenever the US markets went up, our market also used to perform well and it used to go up. But now it's not the case. That correlation has decreased, and hence it has opened up opportunities for a lot of investors for true diversification. And the second reason, as we discussed right now, is the poor performance of the Indian rupee. The US markets have given a phenomenal rally without the INR depreciation, right? So if you had purchased just $1 few years ago at the rate of 70 rupees per dollar, while you're holding it right now, you'd be sitting on 84 rupees, right? Without any investments made, just investing in the dollar. Now there are two more reasons that we'll discuss quickly. One is volatility. Because the US market is a much more matured market, the volatility that we see on a per day basis is much lower than what we see in India. So your asset, I'm not calling it safe, it is in a much less volatile asset when you're investing into the US. And the fourth and most important reason is valuations. If you're looking at the PE ratios, price to earnings ratios in India, it is very high compared to most of the markets around the world. In fact, India is one of the highest priced markets across the world. And just to prove that point, you can compare any stock in the Indian market, which is also simultaneously listed in the US markets. And you would be seeing that the US market prices of the same company, the market valuations would be much lower. That means the price to earnings ratio there is much better. You have much more value to be unlocked by investing in the US. So 4 points on why you should be investing into the US markets. Now let's look at how you can start your investment journey with a very minimal amount, starting at 500 rupees and without getting concerned of all the apps, right? I'm not naming any names, but without getting any concern if these apps are legitimate or not. So let's get started. So when I was looking into the US stocks, I was most interested by NASDAQ. So as you know, US is a tech hub of the world. No matter what you say about it, US is surely the one who comes up with the most innovative technologies, and they manage to get the most skilled employees as well. Even though a big chunk of these intellectual individuals are from India, there is something about the US that keeps pulling these people there and giving them a lot of opportunities to work with. So the most interesting thing for me was the NASDAQ index. If you do not know about it, NASDAQ index is the tech index. It is known as the tech index in the US. It's ruled by companies I'm sure all of you know about: Apple, Amazon, Google, Facebook, Netflix, Tesla, and a lot more. So yes, how you can invest into US tech companies is through NASDAQ mutual funds. So the first one here is a Motilal Oswal NASDAQ 100 Fund of Fund. So this is a very popular mutual fund by Motilal Oswal, which invests into NASDAQ, and it is called as a fund of fund because it invests in a certain mutual fund, which in turn invests into NASDAQ, right? So a fund which invests into a fund which directly invest into companies in the NASDAQ. Now for the video, we can quickly look at the CAGR returns over the last 5 years for this fund. So it has gained nearly 25% every single year and has been an amazing investment for someone who wants to invest into these US companies. So even over the last 1 year, it has given a return of more than 30%. That is a potential of the US markets. And yes, as you can see here, the expense ratio is quite low and the minimum investment is starting from just 500 rupees. Now there are times when this fund finds its problems as well because of the government's limit on how much a certain mutual fund can invest into foreign countries. This fund sometimes hits the limits. So I'll quickly show you another fund too, which was more recently introduced, which is a competitor to the NASDAQ fund. So this is the ICICI Prudential NASDAQ 100 index fund. You can see that similarly over the last 1 year, it has given a return of 29.21%. The expense ratio is slightly higher at 0.52, but it is still digestible. And if you're going into the stocks and companies in which it invests in, you can see that it is in the exact proportion of how NASDAQ is made up, right? So Microsoft Corporation, Apple, Nvidia, Amazon, Broadcom, Facebook. So these are all the companies you'll be putting your money into. You can also simultaneously look into Motilal Oswal's S&P 500 index fund. It's a different index in the US and you can see which all stocks they're investing into. Again, it's Microsoft, Apple, Nvidia, Amazon, but the ratios are slightly different because this is a different index, but that is okay. Now again, hope you got the why you should be investing into the US, because it will help you with a lot of diversification in your portfolio. It will ensure that you get really good returns and you're protected from all the volatility and the rupee depreciation as well. And if you're asking me how much to invest, so here also I have an opinion. I'm saying you should be investing not more than 15 to 20% of your entire portfolio into the US market, because as I've said earlier, the market is a place where you should be understanding what you're investing into. And these companies right here, I'm not sure how many of you would do proper analysis of this, but because it's from the US and because these are the major tech companies in the world, there is a good chance that they'll tend to perform really well over the long term. But you should, at the same time, you should not be blindly putting your money into or your entire money into such US stocks as well. So hope you like this simple and short video on how to invest into US companies, and in my opinion, this is the only way you should be doing it. You should not be relying on any other apps. Hope you share this video with anyone you see who are investing into these platforms, and let's make this message loud and clear. When there are highly regulated, very organized players in the market who are helping you do the same in an intelligent way, why should you be going and putting your money into these platforms where you're going to invest into individual stocks at one at a time, where you do not have proper diversification, where you have not done the fundamental analysis of these companies? You should not be looking at that. So this is Ajay Ajith signing off. See you all in another video. Bye bye.